I'm Aoifinn Devitt, CIO at Moneta, and we are delighted to bring you our outlook for 2022 in this Moneta Moment. But before we look forward, let's look back at what has been a tumultuous year over the course of 2021. Equity markets were stubbornly resilient over the course of the year, with storylines dominated by meme stocks, discussion of vaccine advances, news on COVID, discussion of new tech titans, and we saw inflows into equity markets at historic highs. On the global stage, US markets were dominant, with emerging markets and Asia in particular underperforming meaningfully. The US dollar has remained strong all year, with inflation fears being a steady drumbeat, and these built to a crescendo at the end of the year, where we saw inflation hit a 39-year high in the US. Despite lower interest rates, the strength in equity markets and inflation fears, bonds also showed strength over the course of 2021. Oil prices showed stark volatility over the year and energy prices soared. We are going to look at two charts here to indicate the potential direction of inflation as well as growth over the course of the next year. The first chart is a historic look back to inflation rates to the late 1940s. We can see that in recent years inflation has been steadily rising, and we expect that this will be a continuing theme over the course of 2022. The next chart looks at the yield curve. We can see that the yield curve is currently flat, which suggests that not only will rates remain low, but that investors expect growth expectations to be muted going forward. So what is our outlook for 2022? We believe that equity markets will continue to be volatile, with COVID news persisting and markets vacillating between periods of stubborn resilience, as we've seen in 2021, and periods of fragility. We believe that sectors to watch will be those tied to sustainability and the energy transition, such as battery storage, electric vehicles, and renewable energy. It is clear that nobody believes that inflation is transitory now, and we'll be watching how well consumers cope with higher prices without the boost of stimulus payments. We'll also be watching how companies maintain their margins as they face rising input costs, as well as varying degrees of pricing power. We do expect interest rates to rise in 2022, but that central banks may face headwinds if the economy sputters, and that any rate rises will be slow and steady. The sector of real estate will continue to change shape as we continue to figure out how we live and work. Finally, we believe that political chatter will build in the US over the course of 2022, reaching a crescendo around the midterms at the end of the year. This is only likely to add to the uncertainty in equity markets and add to the volatility that we've spoken about. I'm Aoifinn Devitt, CIO at Moneta, and thank you for listening to this Moneta Moment.